Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another daily cryptocurrency market update. For those of you that are new around here, we release a daily video where we cover the cryptocurrency market, where it's at, and where we think it's going every single day at 1 p.m. UK time. So before I go on to start this video, guys, if you can really help me out and leave a like and a comment, it does help me with the algorithm and helps promote this content to a wider audience. What are we going to be talking about today? Well, we're going to be addressing this pullback that we're seeing currently for Bitcoin. And is there any reason to worry? Well, if you've been following me, my channel, or indeed if you are a Patreon and you've taken that next step in your investment journey, then you would largely have expected this, and you'll know levels that we are looking at for this pullback to go to, with an invalidation point to where this becomes more than just a pullback and potentially a full retracement of the move that we've seen from the start of January. Now, a quick recap. We decided to enter the cryptocurrency market from an investment cold pot on the 5th of January, and really the start of January, following a conversation that I had with my Patreons. I then publicly came out and said that I had entered the market for the first time in nearly a year. You know, we got out the market here and re-entered down here. Now, at the time, it was not a very obvious call, but with the benefit of hindsight, it's been a call that has served us very, very well, as we've seen lots of appreciation. And of course, maybe it's easier for somebody like myself to hold during a pullback like this than potentially people who have entered at a higher price. However, again, if you've been following me, you'll know we're very much set, in my opinion, for more upside, and are now potentially forming a right shoulder in an inverse head and shoulders pattern that could see Bitcoin 30, 40K in the coming months. And of course, altcoins are going to appreciate for that. And I think likely right now, people are getting shaken out. So what I want to do before we dive into the technicals, we're going to draw the pattern. We're going to sort of, express a lot of the things that we've been saying over the past weeks. Just to really show people where we're at and that this is fine. We'll even draw the fibs on, show you the levels again. I want to explain why the market is doing what it's doing. So yesterday, we had a key inflation measure that rose by 0.6%. This was the PCE. Really makes me laugh how you've got all these crypto investors now becoming macroeconomists. I guess I'm a hypocrite for even saying it makes me laugh, as I've become one of them myself. However, I really follow the people who have been doing this for a long time. We've had many of them on the show. And essentially, what you've had with inflationary data, the CPI, the PPE, and the PCE for the United States, is you've had inflation show up rather sticky. And we've gone from inflation that was 9.1% in the US down to 6.5. And the most recent was 6.4, which shows this kind of, we're not really decaying in terms of inflation at the same point, which the narrative for markets has been that the Fed, okay, well, inflation's coming down, rates are near a top, let's start to maybe reallocate. There's been a bit of a spanner thrown in that. And there was always going to be a spanner thrown in that, okay? It's very rare that something just goes down without any kind of bumps in the road. And this potentially is the bump in the road. And we've got the CPI coming out next month, being March, and we've also got the Fed's rate decision. And then now lots of talk about 50 basis points. I personally don't think they'll do 50. I think they'll stick with the 25. I think the Fed, they've got to be very careful because we're already at a debt ceiling. We're already at this kind of, they're on this tightrope where they've got over tightening, which leads to a break, which leads to shitloads of stimulus and a continuation in inflation. Or they've got being conservative, which may see inflation be a little bit higher, but nothing probably is going to break, at least imminently. And I think they're going to choose the path of least resistance, which is this one. So I don't think they're going to do a 50. I think markets will act very positively to that. And it's going to be telling to see what the CPI is. Now, we actually did a video before we got the CPI print. I don't think I released it on YouTube, where we looked at the basket of things that make up the CPI. You can go and Google it and then look at the individual asset classes and see where they're at. And you'll get a good gauge of what inflation's doing. It's largely doing what it did in January and February. It's just kind of, gone up and then it's come back down, and we'll see where it sort of ends up. But the Fed essentially are on this kind of a tightrope, and this inflationary data is causing markets to go, okay. Now, what drives markets? Liquidity. What is liquidity dependent on? The Fed, essentially, in many regards, certainly looking at the US as a case specific, but you can sort of echo this around the Western world, and other parts, Australia, Canada. Obviously, China's a bit of a pariah, but we've spoken about that, and I don't really want to dive into China as a basket case. But what you'll see here, this is from Michael Brown. This is a UK kind of economist. And you can see, if we start on the 1st of February, this is what markets are implying for rates. So just a touch above 5%, and then coming down pretty sharply at the end of the year, or starting sort of mid-year. Then you can see on the 3rd of February, with data being a little bit sticky, markets are pricing high rates. Then you've got the 14th, which was the CPI, markets kind of overshot. And then you've got on the 24th, which was yesterday, markets pricing in a far more aggressive Fed, and rates actually moving up towards that 6% mark. Which is interesting, because if we got to 6%, you'd end up in this situation where actually you had higher rates than inflation. We don't want to talk about that world and what that looks like just yet, but something we'll probably cover. So, what does this mean? Well, it means that the markets are implying higher rates, which means they're implying less liquidity, which means they're adjusting in accordance. And this is the theme that we've been on about, something that I covered with my Patreons on Sunday, and I focused specifically on the topic for this exact reason, because this is what's driving the markets and driving this sell-off. So this is the 2nd of February for the S&P. 1st of February for the S&P. What's the trend here? They're going down. They're adjusting with rates going up, which of course sees Dixie strength. 2nd of February, up. The main one to watch is the yields. February, up. This 2-year yield, government bonds for the US, is one of the main things I'm looking at. Because with the pullback we're currently seeing for Bitcoin, this is alpha here, guys. What the hell is that? Apologies. With the pullback that we're seeing for Bitcoin, it's going to correlate to when it ends with when the dollar rolls, or at least takes a break, and when this takes a break. And that may come with definitive data next month, or with changes. This week coming, I think we've got like 5 or 6 Fed speakers. I'll do a bit more of an in-depth analysis on it on Sunday, so tomorrow for you. But this is essentially what's going on. Rates are being priced higher. Markets are selling off in accordance. You can see Bitcoin tried to follow the trend of markets here on the 2nd of February, but they got this pop out. Now, there was divergence on this pop, looking at it the daily, looking at the weekly, look at it however the hell you want, which show that a lot less momentum in this high. It's a marginally higher high as well. So what you've got is you've got decay in terms of the sort of, what you're doing here. If you look at the periods between a rest that you're having for Bitcoin, they're getting smaller and smaller and smaller. So the progress is decaying. Not sure where I was going with that and what I was trying to do, but you can kind of, if you measure the momentum, till you have a kind of rest, then you've got this one, and then you got this one. So you can see the progress is really decaying. And now you're having a rest. So let's go on to the technicals, what we're looking at. And if you've been if you've been following the channel, it's why it's so important, guys, because we're not the best technical analyzers out there. I'm not the best trader out there. I'm not the best investor out there. But I am all of those things. A technical analyzer, a trader, and an investor, which, let me tell you, in the land of YouTube, you're actually doing those things and actively doing those things. You're doing more than the majority of the content creators on these platforms. Anyway, don't go on a rant about YouTube and Twitter and the kind of caliber of crypto content creators. I mean, I have no idea how people have got to hundreds of thousands of followers. They've never even shown a single P&L, yet they tell you they're great traders. And I've seen lots of great traders recently get absolutely wrecked trying to short this. But I guess, that's just the game of trading. So this is what we've been looking at. Right now, initially we had this kind of not so great. This could be your right shoulder, and this could set you up for continuation. I think given this pullback, it's more than likely. There was a period where we were sort of resting here. Can you see all these wicks and we were interacting? If you'd set up for upside then, this would have been your right shoulder. The likelihood is that this is your head and shoulders and this is your neckline. So this is your right shoulder. Let's use I forget they give you a head and shoulders tool. I'm always drawing them. Dun, dun, dun. Dun, dun, dun. And we're trying to work out where does this right shoulder go to. So let's look at it. All levels we've set out previously, guys. We were very much expecting this. It's been a possibility with everything going on. It's the benefit of being in a community of people that are all working towards the same goal. Because essentially, you know, when stuff like this happens, you won't shit the bed. And there's a lot of people I've seen literally over a 24-hour period with that PCE number come out, people go from bullish to bearish like that. Not even looking at the charts, just sentiment. They see red in the charts, down, down, down. Okay, but this is what we want. This is bullish, providing it doesn't get invalidated, because you're forming a reversal structure, head and shoulders on a broad time frame typically. And bearing in mind, this head and shoulders would have been forming now for a whopping nearly year. You will explode out of this. The greatest opportunity of your lifetime is in front of you today. And it's the cryptocurrency market and being in before they allow everybody else to get in, i.e. institutions, mass adoption, pensions, everything. The entire world is going to be tokenized. And the amount of despair and negativity I see towards crypto and the participants within it is laughable. People don't know what they've got in front of them in regards to the crypto space. And that's what this channel is here to remind you of every single day, guys. So looking at this in terms of levels to retrace to, let's chop them up. You got 786. You got your 618, your golden. You got this one. And then you got the one you don't want to cross. There we go. That's me losing money. Chicken. Sort of. So you got a top here. These are your armpits. And now you're having a pullback. So this was your 768 that you've smashed through. Look for your 618, which is here. Around about 21,500. You may not get it. I'm not going to suggest that anybody does anything. I will say I'll be taking advantage of this pullback 100% in terms of buying. You want to find out where, again, join the Patreon. This could be a possibility. You know, maybe you do something like this. You consolidate around here and you look for that upside. Or you could do something like this. You're going to bounce here. And then you could have a deeper pullback, which could come on quite a negative month next month. You know, maybe the dollar continues up to yields continue up, market shit the bed and continue to sort of readjust. There is a possibility of your halfway mark, and then you've got your 0.3 ratio. You wouldn't want to go below this because then you're validating this left shoulder. Your right shoulder is going to be a larger one, which gives kind of a good inkling that it's not going to play out as a technical pattern. Not unheard of, but not likely something I'd bet on. And actually, you've retraced the majority of this up leg, which suggests that you're probably going to continue going lower. This is the point of invalidation. Okay? I wouldn't want to see it go past this. So I wouldn't want to see 20K taken. But this is the point of invalidation where we'll say, okay, we're wrong. People think investing is about instant gratitude. No, it's about looking and weighing up a situation and planning for it accordingly with your capital. So this is still the play for me until it's not. And actually, this pullback was not only expected, it was foretold. Yet I see panic. Markets do not just go up in straight lines. So whether you come here and that's your head and shoulders, or whether it's here, or whether it's here, that would be pretty much no, don't want to see that. So your worst case scenario for me would be here until we start to look at maybe being validated. Here, maybe it just tops out somewhere here. You just don't know on the term of economic data. But crypto's tried to run against that macro backdrop readjusting rate nonsense. It's not nonsense, but just to emphasize my point. And essentially, it's got tied out. And you can see that with the marginally high. You can see that with momentum indicators. And this is exactly what's happening. So the path forwards for me is a clear one. And everyone's going to go, well, the macro's shit. Yeah, the macro is crap. I told you about a friend of mine who went to go and get a car on finance. They actually rang me up to see if I'd lend them the money because the finance deal was just insane. Consumers are getting punished with these high rates. But there's something going on with crypto right now. Cryptocurrency market is a $1 trillion market. That is nothing in the sea of liquidity that's out there. And all that's stopping it from being a $10 trillion market is regulations, which there's been a huge advancement in just this year already. I reckon you're going to have regulatory framework by the end of this year, potentially. Bitcoin halving next year. You know, we'll see what happens, guys. But this is what we're looking at. This is what we've continued to look at. You know, maybe I'm wrong, but this is putting it all on the table for you. This is where I'm at, and this is what I'm doing moving forwards. And, you know, again, looking with my community at opportunities within potentially what you're going to get. So that's all I've got for you in this video. Hopefully it's been a decent one. It's been 16 minutes. If you've enjoyed the content, a like is always greatly appreciated. So is a comment. And I look forward to seeing you all in the next YouTube video. Have a smashing Saturday, guys. See you in the next one.